Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 327 on June the 14th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on AMC Entertainment Holdings, Xpeng Inc., and Rivian Automotive, and we discuss three new trades on Riot Platforms, Hut 8 Corporation, and Intel Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the two main equity indexes in the U.S. had different outcomes this week. It highlights the different weightings of technology companies in the two indices. Now, the Dow Jones Industrial Average lost 209 points, closing on Friday at 38,589 points. The S&P 500 index gained 84 points, ending the week at 5,431 points. And now it's time for the topic of the week. The topic of the week is sticky numbers. As crazy as it might sound, every market has what I like to think of as sticky numbers. These numbers seem to attract volume and size, and when you're near one of them, you should be aware of their power. It really changes based on the factors that matter for that particular stock or futures contract. Oftentimes, it has to do with where people are prone to leave their stops and their limit orders. I spend a lot of time looking at the S&P 500 index. When the two last digits are near 00, 25, or 50, you must be aware of the power of those numbers. It's not magic, it just has to do with the volume of orders that are around those price points. Another sticky price level is the opening price of the day. It's amazing how often prices will move away from the opening price only to return to that level during the day. Again, every market is a little different, so it's important to study the way price moves in each market. It's also helpful to make sure you understand how technical indicators respond to the price of the specific companies that you're watching and trading. Understanding the levels that are important will give you an extra leg up in entering and managing your trading positions. Consider this part of doing the practice to get good at your craft. Look for sticky numbers, or said another way, price levels that always seem to attract lots of volume. You can thank me for this later. All right, so let's get into the trading review from last week's trades. We're going to start off with the covered call on AMC Entertainment Holdings, symbol A as in Alpha, M as in Mike, C as in Charlie. At the time, the stock was trading for $4.90 per share. I looked at buying stock and selling the June 5 call at 72 cents, which could give us a return of 16.72% in 2 weeks. Well, shares of AMC closed 8 cents higher, ending the week at $4.98 per share. The call option we sold lost 31 cents, leaving us with a net profit of 39 cents if we were to close the trade out immediately. Now, we are literally 1 week and 2 pennies away from expiration and possibly capturing our full expected return on this trade. This one is working out well so far, and if the stock were to expire in 1 week at this price, we would actually keep the full amount that we collected for selling the option, and we'd keep our stock. That would allow us to sell another call option against the shares in the next month. That would actually push our profit from 16.73% to more than 33%. So I would lean towards not making any adjustment on this one at all, and instead just having a plan in place for expiration in a week. All in, this was a nice trade. Next up, we have our credit spread on Xpeng Inc., symbol X as in X-ray, P as in Papa, E as in Echo, V as in Victor. At the time, the stock was trading for $8.14 per share. I looked at selling the June 8, 7.5 put spread at 16 cents, which could give us a maximum possible loss of 34 cents per spread. Well, shares of Xpeng lost 94 cents, ending the week at $7.20 per share. The out-of-the-money put spread that we sold is now in the money, and we're looking at assuming the full possible loss of 34 cents. That sucks. Now, with 1 week left until expiration, the pricings are not very enticing to adjust this trade either. So I would simply wait over the next 5 days to see where the stock is going to close. It's totally possible that it'll catch a little bit of a bid and the price could rise above our break-even price. Either way, since we traded a spread, the loss is going to be limited. This trade didn't work out as desired, but we will see what the next week brings for this trade. Remember, if making an adjustment doesn't reduce your possible loss even more, then it's not worth executing. Don't add to your risk while trying to protect yourself against the loss. You more than likely will just increase the total size of the loss. And now our final trade from last week was a debit spread, also not necessarily a good outcome. It's going to be Rivian Automotive, symbol R as in Romeo, I as in India, V as in Victor, N as in November. At the time, the stock was trading for $11.52 per share. I looked at buying the June 11.5 call spread for 30 cents, which could give us a maximum gain of 20 cents, or that would be a 66.67% return in 2 weeks. Now, shares of Rivian lost 64 cents, ending the week at $10.88 per share. The in-the-money call spread that we bought is now out of the money. Our long strike is 12 cents out of the money, and our spread has lost roughly half its value this week. Now, this is a tough trade because we are right on the fence. You could close the trade and save half your capital. However, this stock could easily head higher in the coming 5 days, leaving us with a very nice return. So I'm more prone to not make an adjustment on this trade either and track the stock over the coming days. We are below the break-even point, so if you decided to close the trade immediately out of principle, it's not a bad idea. It's not a bad thing at all. You're just trying to save half of your capital on this trade. But for those of you who are sizing your trade, sizing your spread so that you are able to handle the loss if one comes, then this might be one worth keeping. I'm certainly going to look at it that way. So that's it for the review of last week's trades. We are 1 week away from the June monthly expiration on June 21st. The new trades on today's show will use the July 19th expiration for monthly options in July. So we're going to start off with our covered call as usual. This week we're looking at Riot Platforms Inc., symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. The stock ended the week at $10.53 per share. I'm looking at buying stock and selling the July 11 call at 89 cents. That could give us a return of 12.92% in 5 weeks. Now you enter this trade by buying stock for $10.53 per share and selling the July 11 call at 89 cents. This trade makes the most money if stock prices finish above $11 per share. The break-even price is $9.64 per share, and in real terms, the stock purchase would require $1,053, and you would collect $89 for selling the option. Next up, we have the credit spread on Hut 8 Corporation, symbol H as in hotel, U as in uniform, T as in tango. The stock ended the week at $11.28 per share. I'm looking at selling the July 11-10 put spread at 35 cents, which could give us a maximum possible loss of 65 cents per spread. Now you enter this trade by selling the July 11 put at $1.10 and concurrently buying the July 10 put for 75 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $11 per share. The break-even price for this trade is $10.65 per share, and in real terms, you would receive $35 per spread that you sell and have $65 at risk. And then our final trade for the show is going to be a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. The stock ended the week at $30.45 per share. I'm looking at buying the July 29-30 call spread for 66 cents. That could give us a maximum gain of 34 cents, or that's a 51.52% return in 5 weeks. Now you entered this trade by buying the July 29 call for $2.23 and concurrently selling the July 30 call at $1.57. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $30 per share. The break-even price on this trade is $29.66 per share, and in real terms, you'll pay $66 to enter the spread, and your maximum gain is $34 per spread. So that's it for this week's show. Thank you guys so much for listening. For those of you who listen to me on Spotify, welcome back. I realized that the show had gotten dropped from Spotify by accident along the way. Gotta love technology. I know it was by accident because they accepted me right on back, and I can see in my listens that you guys found me again. So welcome back, and has a couple of other links that needed to be moved around. So things are updated, all as well, and I'm ready for summer. I mean, I hope you guys are both enjoying the warmer weather. I love warm weather, and I hope you're taking the time to get better at trading. I'm telling you, summer is like off season so that you can finish the year strong in Q4, basically right after Labor Day in September. It's game on for the market. And there's still a lot to come, a lot of news to come for this year. I mean, not only do we have a presidential election, but thus far, we haven't seen the Federal Reserve change the interest rates here in the U.S., and they've hinted for the longest time that they were leaning towards reducing rates. So this year could have a lot more fun to come. So, man, stay on top of it. Be ready, because when the opportunity is there, you have to have the skill to be able to take advantage of it. So that's it. If you have any questions, definitely shoot me an email. I hope you guys have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.